Are you looking to buy a home? Are you looking to get a home loan? We are going to go into a couple different basic and unique home loan scenarios. These scenarios of people coming to Angelo with their unique backgrounds and rich, poor, bankrupt, going through the struggles of life. We are going to get into it, Angelo. And team, if you need a mortgage, if you're looking to get a home, if you're looking to refi, click the pin link in the comment section down below, and that will take you directly to our website where you can get in contact with Angelo and his team. Angelo, let's get into these scenarios here first. Scenario one here is you're newly self-employed and you have a lot of assets, but complications arise when you are newly self-employed. Angelo, you have a scenario for me. Tell me this story.
Yeah, Gavin, I do get this question quite a bit. I do have clients calling that just either switch from a W-2 position to newly self-employed that, that want to purchase a home. And many of them don't have assets or are not asset heavy. But in this particular case, I do have a previous client. We had him locked in at like a 2.5 interest rate on his primary residence. He is in McAdenville. It's a great place to be. He reaches out to me. He's like, Angelo, look, thank you so much for getting me that rate a couple years back. There's a house in my neighborhood that we have to have, right? I was like, well, cool, man. Well, let's get it. And he's like, but I have a big problem. I was like, well, what's that? He's like, well, I'm newly self-employed. Like within a year, I'm about to file my tax returns for the first time in trust. It's not going to be pretty. I was like, well, yeah, that's a big problem. So send me what you got. Let me take a look at it. Let's see if there's anything we can work with, and then we'll go from there. So I had him do the new app, completed everything, and lo and behold, yes, he could not basically afford to pay attention on paper. But here's the thing. He has a ton of assets, right? So he's asset heavy. So I do have a loan program, and I basically called him up. I'm like, hey, bro, here's the deal. I do have a loan program that may fit what you're looking to get into, but it is going to come with some gut punches, and that gut punch is a high mortgage payment. The interest rate's not as pretty as a conventional loan, right? So are you okay with that? He's like, Angelo, for right now, I'll be okay with that because it's just a temporary thing. Got to bridge that gap once I get my taxes done so I can get out of the loan. But if you can get me something, my wife says we have to have this house. Can you make it happen? I'm like, I got you, man. So it's a no ratio loan that we have. There's only 2 lenders that I know of that have access to this program. We do not care about the income. You do, of course, have to pay your bills, so the credit's got to be good. It doesn't matter what your income is, but you have to have assets. And depending on your down payment, you either have to have 9 months PITI, 12 months, 18 months PITI in the bank, principal, interest, taxes, and insurance, and any HOA dues in the bank after closing. So in his particular scenario, he's putting about 35% down. He needed about 9 months of reserves in the bank after closing. He was able to meet those guidelines. So now that payment was about $7,800 a month. And I went to him and said, hey, are you sure that you're okay with this payment? Are you sure you can substantiate that? He's like, I'm 100% sure. I'm going to be selling my primary. I'll have a bunch of cash from the equity of that primary to put in the bank and to make these payments until we bridge that gap. So I feel comfortable with it. He feels comfortable with it. He is completely aware of, the consequences that this loan program has because of the higher interest rate, which isn't actually that bad. 8.875 on this rate, and an investment property is around 7.5. So when you think about it, it's not that bad of a deal. So when you got to pay to play. So in this particular scenario, he's paying to play.
Scenario 2 here is you're rich, but you can't prove your income. In this scenario, Angelo, you were telling me before we started here, we got a rich guy here, but he has some complications as well. There's always complications, but You have an interesting story to tell. What about this guy?
So in this particular scenario, we get a call. This was a Wells Fargo fallout. I get a phone call from a relative of mine. I'm not going to name names here, but I get a call and said, hey, man, I got a client that he just fell out of Wells Fargo. He's under contract on a home, literally final hour. He needs some help. He just got basically declined from Wells. Can you help? I was like, well, I have no idea. Let me talk to him. So I get him on the phone. He's like, Angelo, I have about $900 to $1 million in assets. I have some royalties from AT&T. I just can't prove this money on paper. Do you have anything for me? Well, lo and behold, I do. There are some loopholes that many people may not know about with Fannie Mae guidelines. If you do have a lot of money in the bank, if you can put that money into, or if you can start like a distribution, but you have to wait, there's a seasoning requirement. You have to wait, sometimes 3-6 months for the distributions to see in your bank account to use that as income. But there is a loophole that Fannie Mae has to very educated and well-seasoned loan officers that if you put that money in a trust and create or put a distribution in place from that trust, you can use it immediately. So we were able to save that deal, save him from losing any due diligence and earnest money, appraisal, inspections, all of that. He was putting 20% down payment on the home. It was a conventional loan, so we were able to get great rates for him, get him into the home of his dreams. Even though he could not prove that money on paper, we were able to find some loopholes with guidelines to put that in place immediately for him to get him into the house. So, and that is the bonuses of working with an educated, experienced mortgage company, not just the mortgage, the loan officer itself. Even if you don't have an experience as a loan officer, like the company as a whole should have an experience to know that there are some loopholes with certain guidelines.
Scenario 3, and one of my favorite scenarios, is you went bankrupt and you now want to buy a house. Angelo, tell me this story.
Man, people go through some troubled times, not everything is always an easy, smooth course through everybody's life. Some people have troubles and they can pick themselves and get back on the horse. And so in this particular scenario, he was a buddy of mine. He came to me and he was like, hey man, I've had some credit troubles in the past. I had to file bankruptcy. I was self-employed previously, but since 2021, I am W-2, been with a great company. I'm cleaning my stuff up from the past. He's like, but I'm just not sure that I can get approved for a loan. We want to expand our home. We have 2 boys, and we want to get a bigger house. I just don't know if I can get a house. So I was like, all right, brother, just of course do the application. I need to see everything on paper. Go ahead and submit all your BK docs, all that stuff, right? I need to see things in front of me. I can visualize stuff as much as I want in my head, but I want to see stuff in my software. I want to look at dates because we do have programs, right? FHA is a little bit more lenient on bankruptcies than conventional is. FHA is 2 years, conventional is 4 years. Now, if you have a foreclosure included in that bankruptcy, then it's 7 years minimum for a conventional loan, if you were wondering. So, but in his particular scenario, his bankruptcy was discharged 2.5 years ago, almost 3. So I was able to make sure that he met the seasoning requirements to get him solidified for an FHA loan. He also had some IRS tax liens that haven't yet showed up on some FHA reports. So I was like, hey, bro, you need to go ahead and get moving quick before they show up, just in case, there's some issues that come into play with that down the road. So better to go ahead and knock it out, get it done now so you won't have to worry about that stuff. So he's in the process and we'll get him buttoned up here ASAP. So I like being able to find solutions for problems, that people think that there's no solution for. That's what we thrive on here at Leverage. Like anybody can do a W-2 borrower, those, which we'll probably get into that here in the next video, but challenges are good. We like to say challenge accepted. So
Scenario 4, and we call this "You're rich, life is good," and this is going to be a slam dunk loan. Angelo, what does this look like? This isn't unique really at all, but this guy is very rich.
Well, we can do hard loans, Gavin, but we love the easy ones, right? We call this a layup or a slam dunk. Had a borrower come over to me, referral from a client. has a ton of money. W-2 borrower, very easy to prove. It's not like he's got self-employed and got 15 shell companies, right? Very easy, straightforward W-2 borrower. Like $1.5 million in the bank, in addition to his killer income, a couple other properties. He's putting 35% down on a jumbo loan. That 35% is a sweet spot. So we have like awesome pricing when it comes to that, kind of smoking pretty much every bank rate out there. If you were to price out a bank rate, but, at that loan to value, 35%, it's a slam dunk. We got him approved, clear to close in 3 days. We got the appraisal, we got the CDA. No, everything came in with flying colors. That is a loan that we will do and can do all day, every day. So bring them. What else you got for me, Gavin?
I'm just thinking, is there anything, like what makes that so easy?
What makes it so easy? Because everything it's easily documented. It's easily verified.
There it is.
It's a lot of times people we ask them for documentation and they just for some reason can't come up with it. But this guy was just Johnny on the spot. He had everything that we needed. It was we couldn't have asked for a more easy transaction. And so and he's an attorney, so he's got his shit together.
Angelo, these were some pretty interesting scenarios here. So we have, like, I called the first guy like the Home Alone guy. We were looking at the house. I was like, I need to see the house. I looked at the house. Looks like identical straight out of the Home Alone movie. And then we get into some bankrupt stories. We get into some people that have money, have assets. What do people need to know before having a conversation with you? What should they have prepared? What is the mindset they should go in before they talk to you?
Think about the details. Think about the little intricacies of some of the problems that you're having. And if you are having problems or have had problems, like we need to know all of this information up front. We need to know if there's some potential tax liens. We need to know if you're asset heavy, right? We need to know if you're newly self-employed. Don't just tell us, after the fact or, because I have a lot of these clients are return clients, so their information has changed. So I need to know, because I can't just rely on what I have in the previous loan applications because some stuff changes, but also to know that just because you've had some hard times or some hardships, some extenuating circumstances, it's not the end of the world. So there's options out there, and that's, these government-backed programs, some people say they hate FHA or VA. These government-backed programs, they are lifelines for people because they really do help for challenged or previously challenged, credit challenged borrowers that have had, some hiccups in the past. So just make sure that when you're telling us, when you're having these initial consults and, we're going through the application process, we're going to vet you out. Once we get the application, we're going to probably, we're going to go over the application with you with a fine tooth comb. So just making sure that we're most likely going to find it. If it doesn't come up through our pre-approval process, we're going to find it when we pull credit, or it's going to maybe come up in underwriting if for some reason it's not, on the surface. So just tell us before, because we can work around it. As you can see with some of these pretty creative products that we have, we can usually find a solution to the problem that you have. Now, definitely better when you are asset heavy. So, but anyways, we can find solutions.
Make sure you talk to your dad. Make sure he sets up a trust fund for you, and everything will be smooth sailing. Make sure you make $500,000 a year, and make sure you have, $2 million in reserves, and you'll get the house what you want. You'll get whatever you want.
We can make a lot of stuff happen if you get money in the bank, people. So,
team, click the pin link down below if you need help with your own scenario. If you're looking to buy a home, you need to talk to someone. You need to talk to a mortgage professional, because as you can see here, they get very complicated, and they get complicated very quickly. So make sure you do that. Team, we will see you on next week's video. Bye.